The following content is meant purely for educational and informational purposes and should not be relied upon as financial, investment, legal, tax, or any other professional advice. This is the Fundamentals Podcast, where we demystify crypto and help you navigate this ever-evolving internet-native economy. I think a good question to set the stage before we start diving into more of the details would just be that, what is the Nibiru Chain and how would you kind of describe its core value proposition within this space?
So Nibiru is a general purpose layer 1 with superior throughput. So potentially exceeding 40K TPS, what we found in like early innings, but we've also worked on a couple optimizations since that reported figure. So to kind of summarize, it goes over Nibiru as WASM smart contracts, which the main advantage there is that you get to leverage all the tooling over IBC, and they're very secure to build in for getting apps out in production. And then Nibiru also has, coming up in this next upgrade, a high performance Ethereum virtual machine execution layer. So we added improvements across areas like actual app development, everything all the way to like the DB backend, data indexing. But we're really, I think for the core value prop, we're really aiming with the Nibiru EVM to go beyond basic implementations of the Ethereum protocol and improve the performance and make it possible to create more powerful smart contract apps, especially on top of IBC.
And diving a little bit more into that on what you're trying to improve as a general purpose L1, could you describe in a bit more detail what the top optimizations are that you've really focused on compared to previously launched blockchains?
Yeah, so some of these are on the chain and some are off chain that are ancillary properties. So I touched on Nibiru EVM as a big one. So builders can leverage existing tooling, but while still getting the benefits of faster time to finality, parallel execution, and IBC. Another area is I guess I would kind of say 4 areas, right? So one is scalable data indexing. So the core team developed Nibi Indexer, or sometimes we call it Heart Monitor. And basically that's a service that listens to all the blockchain events, messages and transactions, and stores that into structured tables. If you've seen like Flipside does this, right? So that makes it easier for historical retrieval and searchability. We initially were building that as an internal tool, and eventually now turned it into a general purpose indexer that powers an open GraphQL API. So it's similar in spirit to the protocol specific ones of the graph, except it's general purpose in that it's providing utility to the whole network. So in that area, we had to work on like custom way to parse the backend DB of a full node to get it into like regular tables. And then also switching from like the default Go level DB to like RocksDB, give like a 20x performance improvement as well. So that's one area that's been really like useful for people. Another is just also like developer tooling, right? So we made high quality SDKs in most popular languages. So that includes like Python, which, people use for like data science and programmatic trading, TypeScript and JavaScript, which you need for front end and wallet stuff, and then Golang and also Rust. And then as a last one is also another thing for builders is like the dev gas mechanism. So that's a functionality where you register your smart contract with DevGas, and anytime someone says a transaction that calls into your smart contract, instead of that all going to the network, the registered deployer or whoever you want the money to go to actually gets an income for the gas that's expended on their contracts. So that helps make the apps like more default sustainable.
That's really cool, actually. And I want to dive into the performance metrics in a bit. But before that, I was just speaking about the developer's perspective here. Given this architecture and optimizations that you laid out, which apps are like best suited to be built on Nibiru right now?
I don't know if there's a particular kind that's best suited, but just from what we're seeing in terms of interest is you, of course, have a lot of DeFi is always like the most popular application. So you're going to see a lot of DeFi apps come into the ecosystem. We are seeing, I didn't touch on this, but Nibiru has a native Oracle that's generally flexible, built in, that can be like queried whether you're on like the WASM side or EVM. And so a lot of RWA projects and things have wanted to rely on that. So I would say basically it's been a mixture of DeFi, RWAs, and gaming.
Okay. And as a general purpose chain, thinking forward, what are the primary use cases that you're envisioning? Are there any specific verticals that you kind of want to focus on, even though you're building out as a more general L1?
I would say it's really just about having like consumer applications that provide real utility. It's not necessarily that it has to fit into a certain sector for us. So that's part of what we're working on. A lot of things like, throughput, tooling, revenue modes for developers is you really want it to be like whatever someone wants to build, they could kind of thrive with on the chain.
Yeah, that makes a lot of sense. And as of today, I mean, you alluded to a little bit, but how would you describe the builder and user base right now?
Yeah, so I guess the builder base is, let's see, I don't know the exact figure in terms of projects, but it started basically, we came out of stealth early last year and then did our first hackathon around the turn of the summer. So that's like the first time you saw builders coming in to work on the chain on testnet. Now I guess I guess it would be like a couple dozen teams working in tandem. But yeah, we just recently started then the mainnet network just to get everything up and running, make it so that, people can stake and everything. But now we should start to see essentially a couple dexes, typical things you've seen like lending, perps, things like that. All projects working on that, and especially some that are on the EVM side that want to launch with that coming up, Q3, Q4. We also did an early airdrop campaign. So there were a couple, I think it was close to like 400,000 people, and not necessarily just bots and stuff, but you could tell from different filtering through like Discord and Twitter and all that. So yeah, a lot of the user base was built up through the testnet and then the early airdrop campaign.
Got it. And of the currently deployed dApps, what is seeing the most traction right now?
Initially, when the network spun up, there's not like a ton for people to do besides stake. So that's what most people did. Some have used, spun up, or they do like the naming service thing, right, to take up space there. There's also like a liquid staking protocol deployed that people are using on the chain. So that's had some use so far. Yeah.
Yeah, makes sense. Now, going back to kind of performance and trying to get a picture of where you fit in this ever-evolving blockchain landscape, how does your current performance compare with other leading blockchains out there right now in terms of transaction speeds, costs, etc.?
Yeah, so Nibiru is currently at about 40K for standard bank transfers, as they're called. So in performance-wise, that's behind something like a Solana V, where the reported throughput is higher than, the global max TPS of Visa, which is like roughly 65,000 according to their website. So at 40K, that's actually still really, really high. So Nibiru's performance is that would still be ahead of Avalanche, Ethereum, and like most other L1s and L2s. And yeah, gas costs on an Alt L1 are configurable, so they're pretty low, and node providers can change the price if they want to.
Got it. Thanks for sharing that. Now, given that you've decided to launch your own blockchain, the reason behind that usually is that you see a problem in the existing landscape. There's a place where you kind of fit in a solution that you need to provide. So from your perspective, what do you see as the current state of the blockchain landscape? And then building on that, what's your position within it?
Yeah, so the current state, it's definitely moved past the point of being super niche or a niche concept to one that's more widely recognized. I would still argue it's like in its early innings, if we just indexed it to, large Web2 applications, right? We still don't have as much usage as something like an Uber or a Netflix in the Web3 space. So in that regard, it's, still a very early time to be building in it. And I guess, although we are seeing a lot of exciting things from the interoperability side coming into light now, it is still very difficult to like onboard new users into crypto and like their total experience of one, just getting funds onto the chain or like creating wallets if they've never done it before. And so I think and also even after being onboarded, using applications now. So usability or just general user experience, I think, was one of the main things we were seeking to address in the space.
And thinking of longer term visions, what does success look like for you as this space plays out?
Yeah, so of course you want to grow in your common measures of health and usage, right? You want to have a lot of user generated transactions, total value locked in your decentralized applications, and then probably also measured sentiment and taking that sort of like standard product feedback. I don't hear about that a lot in Web3, but that is something we look at a lot of. Actually pull the chat logs from Discord and Telegram and read what everyone says and actually turn those into tickets that get prioritized. That's a big thing for us. So in some sense, it's actually providing somebody utility. Like if they feel happy using the chain or feel that it's like making something easier for them, that's essentially what we want. I do also see, I know we touched on like the current landscape, but maybe also in the future, there's a lot of regulatory developments creating like clearer guidelines now. So I actually think that'll help, not just in terms of perceived security and privacy and compliance, but also actually making it safer for people to use. And so Hopefully more regulatory clarity will also mean increased adoption across different industries, or I think it will be.
I hope so, for sure. And I'm really happy to hear that you're prioritizing like user and customer feedback because this has been such a technologist focused space for so long. We're just building tech, competing against tech, but even sometimes forgetting what the actual user and the people we're supposed to onboard to enable mass adoption wants. So happy to hear that it's or biz dev than just tech. Of course, you got to get the tech right, but then focus on the biz dev to really get the flywheel going. Now, what are the different teams then, or what does your team composition look like over at Nibiru? I was trying to make this happen.
Yeah, so it's mostly just to like people either work directly at the foundation or at the developer co. So that's your typical like what is it, Ava Labs, Ava Foundation, Solana
Yeah.
Labs, like that sort of structure, right? But yeah, the actual breakdown of people that are like full-time contributors is roughly half developers and then half growth. So on the dev side, it's I guess you count myself on both verticals, but I do a lot of backend stuff. One of my co-founders, a CTO, he's also doing a lot on the DB, the protocol itself. But then I guess you would consider that as we would also do like the engineering management. So then there's a couple front end, QA, DevOps, and then mostly us doing the protocol. And then on the growth side, we've got a couple people that were at other L1s. So some were from like Ava Labs, some from venture background or like banking. But yeah, basically there's a few in marketing, a few that do ecosystem and sourcing projects, and then about half developers. Oh, and the team size is like 21 or 2. We're actually pretty lean.
Okay. Yeah, I love that. Love that. Yeah, you don't want to overly bloat the team at an early stage. So it's great to see what you're able to make happen with a lean team there. So, I mean, congrats on everything you've achieved up until now with that team. Sounds great. Moving on to speak a little bit about network stakeholders. We touched on users. You guys are prioritizing their needs and feedback. When we think about who is kind of running the network, well, in addition to you building it, I'd be interested in hearing what the hardware and software requirements are for operating a node on the Nibiru chain.
They're pretty lightweight right now, but just to clarify, so the minimum stake, our Nibiru uses Comet BFT consensus. So the minimum stake requirement is determined through pure competition. Essentially, the top, whatever you have it set to. I think ours is 100 or it might be 150, but whatever. The top n number of synced full nodes that connect to peers and send a transaction to become a validator will become active. So I think the minimum stake to be an active validator right now is a few dollars, actually. It's definitely less than 100 like right now. So it's pretty reasonable. As for hardware, these aren't the minimum requirements. So we usually recommend like 4 CPUs, 16 gigs of RAM, and a terabyte solid state drive because you want to have like room to do upgrades, right? And then also keep a good history of the chain. Those are mostly the tech requirements.
Okay. And what's the current state of your current node operators? Are you happy with the distribution and the amount of people contributing and running these nodes, or is there still work there that needs to be done?
There's definitely enough contribution and like people running infrastructure. What we found though was there's this thing of users don't know who to stake to, and then they end up trying to stake toward the top. So one thing we actually had to do is they kept staking to like the foundation nodes or like the top 2 or 3 validators to the point that it was like becoming a security risk. So we actually had the front end like block people from if you stake too high of a validator. At least, it's not doing it at a network level, but yeah, too many people wanted to stake to the very top validators, which I guess makes sense because it's perceived as like safe. But yeah, that's not necessarily the fault of the infra providers. It's more like, I guess, providing education around like why you should decentralize the stake more to other node runners. But yeah, that's been the only main challenge I would say from a staker side.
Got it. And as the problem or issue there kind of started to fix itself once you block the front end?
Yeah, we just made it if you're like above 20%, it from the Nibiru web app, there's not a button you can't stake to them more. Of course, you could just go do it if you just really wanted to. Still anyway,
Sure.
like through a block explorer or just through the wallet, right? But just putting the warning is enough to tell people like, oh, I should probably try at least, give it to one of the smaller validators.
Yeah, exactly. It's the small things. Let's move on to speak a bit about your financials and the economic model, because you mentioned something really interesting, which was developer gas and having that built in to kind of enable get-go, more self-sustaining apps to be built within your ecosystem, which is really cool approach. Could you lay out your full economic model? So basically how the funds flow through our ecosystem when a user transacts, when they pay fees, how are those distributed, who do they go to, and so forth?
Yeah, so there's a I guess a couple ways to look at that. So one is you could just look at the network itself. So when you pay a transaction, let's say through, if there's no dev gas functionality, typically that's going to the same pool that gets distributed out for token emissions to stakers. So essentially it's delegated proof of stake, right? So validators have a fee that they take out of the commission for people delegating to them. But in general, a certain amount of capital from all of the gas and transaction fees, and then just the natural emissions from the chain. So like in Nibiru, there's the Nibi token goes up to a fixed supply, kind of like the Bitcoin curve, just faster, right? So it's leveling out towards that over time. So that emission of tokens is going into, on some cadence going out to stakers. Then there's also, as people just transact, there's that, right? Some of the funds also flow toward the community pool, it's called. So that's essentially an ownerless account that you can do governance to use the funds from. And so, yeah, that's been useful for, I think, a couple of grants. I mean, most of the grants we've done for building projects have been from the foundation directly, but that's another inflow. And it's like one of the largest piles, right, in the tokenomics, so that over time you kind of phase out where you don't need as much like a team to help run the chain, you would hope, right? But rather that people just vote on things and do it all through governance.
Got it. And native token Nibi, that's used to pay for fees, right?
Yeah. So Nibi is like the staking token. It's also for gas, like we touched on. A lot of dApps want to like have integration so that it like has a lot of use cases in particular on our chain. And then the only thing I didn't touch on is we have a burn mechanism underway, but we didn't say much about it yet. So I guess I'll leave that for another day.
Oh, okay. Yeah. But that's a good tease. So a burn mechanism is underway. So is it so that at the moment the token the emission schedule is such that it is inflationary and there is no deflationary pressure coming from burns or anything else?
Yeah, it's like a fixed predictable supply, but I think it's 25% or something. It's like higher in your first year because it's the highest point. But yeah.
Yeah. And then building on that, why I wanted to ask that is because economic sustainability is, or has been for quite some time, a hot topic around blockchain. I wanted to ask your view on how you're thinking about economic sustainability from the network's perspective, because I think you had great thoughts on, from an app's perspective, you build in something like developer gas, which kind of helps them be sustainable from day one. But how about with the network itself? How are you thinking about sustainability there?
Yeah, I guess that really just comes down to if the operating costs for running the nodes make sense relative to the income from people's transactions on the chain. And funny enough, it seems like the main way to make that sustainable is just you have to have enough usage that it's not a bunch of empty blocks. I mean, that may be like an ultra simplified answer, but that it really is that straightforward, right?
Yeah.
So yeah, like gas is somewhat expensive on Ethereum, but part of the reasons why is like a lot of people use it. So it is pretty sustainable, right?
I like overly simplified answers. Yeah. But listening to that, is it so that when you think about sustainability, you think of it from an individual node operator's perspective, that their costs for running a node need to be less than the income they generate from running that node?
Yeah, because otherwise I mean, if you're thinking not on the scale of 1 to 2 years, but 10 or 20, you want it to make sense for people to just run on their own. I think another thing is having apps kind of similar to how Uniswap operated for a long time, where it's kind of a public good that others can come in and deploy their own liquidity and like thrive without a huge cut going out to the application. Seeing more things like that is probably a huge part of having a sustainable chain as well. So meaning, well, yeah, essentially you want to have things that are as usable and friendly as a centralized exchange, but then don't take out huge fees like a centralized exchange. That's probably the path forward.
Yeah, I would tend to agree. Now, as we think of that direction where we want to have smaller fees with the Uniswap model you alluded to, that's somewhat of a public good, where does or where should value accrual then for a blockchain come from? And how are you thinking of it?
Yeah, typically people just do this at a transaction fee level. I guess I'm not sure where it should come from. I would be more interested in, or rather, it's tough to say what will end up being like the winning model in the future. Yeah, because a lot of things, a lot of chains right now either seem to be more ETH flavored or seem to be more Bitcoin flavored, and then are just like different variations of that. So I don't know that there are a ton of different models in terms of like monetization for blockchains, besides that the tokens end up getting a ton of utility, and then there's expected value toward having them long term. So then, like, purely by being the entity that made it, you're in a good spot. But I don't think that's like a, I mean, I guess it's not terrible because it's like early starting out, but I don't know that that's like the way they should be structured, right? That's what, in I guess the active term in your question being should, right?
Yeah.
But that's how they are right now.
Yeah, that's true. Do you have an idea going forward on how they should, or how you're thinking that could be an improvement to the current situation?
Yeah. Hopefully it just ends up being like, standard capitalism. If an app is popular enough to make enough revenue that it can sustain itself, then it'll continue to be there. So I would hope that it becomes less based on the speculative value of a token and more on like, kind of protocols like GMX or Frax, where they have a very clear like value accrual and revenue stream that comes back to them, where they operate almost like a healthy Web2 business. I would hope that a lot of stuff in this space moves in that direction, I guess.
100% agree with you. I echo that completely. Now, moving on to maybe speak about the metrics then, and how you start assessing that. Yeah, of course, you want to see more revenue than expenses. You're like similar to a profitable Web2 company, but just built on chain. That's what we all love to see, staring at like revenue generated and what the on-chain expenses are. If we think about general metrics that you use to measure the activity and the value of blockchain, what KPIs to you matter the most right now?
We talked about a couple of these. So we look at total value locked, right? That's kind of like a good North Star of just if people feel like they can safely park capital. Volume is one. Each of these has like pros and cons to looking at it, because if just volume in the absence of other things is not telling you much, right? Same thing as like active wallets that can be a proxy for users, but there's also, like differentiating bots versus users when you're just looking at addresses. This is also challenging. But yeah, so I would say user count based things, TVL, volume, and then you could also look at like volume of messages or chatter. So kind of standard marketing things, like we do the whole like UTM links and stuff, and would want to see what flows are like most compelling to people if it's being talked about a lot in like Discord, Telegram, things like that. So those are not like one KPI, but almost like a basket of them that I think it's good to look at.
That's actually interesting. So you combine kind of Web2 attribution methods with UTM links with on-chain attribution to kind of assess.
Yeah, I don't know if that's common, but we do that.
Really interesting. Let me ask it this way. Given what you are tracking, like brutally honestly, how do you rate your current performance at Nibiru?
I mean, it's not that great so far. I mean, we're still pretty young. It's like a budding chain. We're definitely in our infancy. So the killer apps are not there. So a lot of it for now is just seeing like, where do people have difficulty? Which things are the most effective? Like what makes them want to go stake, or ends up being like the questions that they have when first visiting the site, that sort of deal. But I think it had become more granular over time so a lot of it actually right now is just meant to be constructive on how to do things better for people. But yeah.
Yeah, that makes sense. Now, then, even more data-specific question, and of course, I'm asking you from the perspective of Token Terminal. We're building platforms that make it as easy as possible for both project teams to dig into on-chain data, understand what's happening both in their ecosystem and competitive ecosystem, then for investors to come in and really understand at a granular level what's going on. And this data can be used for, stakeholder reporting, business development, investment decision-making, so forth. So at a very practical level, how are you leveraging like on-chain data for decision-making, business development, and reporting at Nibiru?
Yeah, I guess this would be on-chain data, maybe mixed with the surveying, is something we saw kind of early on or through going through the testnet, and also from just having, the growth folks working on sourcing projects to build on the chain, is you go through a lot of product and user discussions, especially from teams that are building. And so one, I think in particular was, even though we're still very like bullish WASM and like the performance and security benefits, could see very quickly that having people overcome the learning hurdle of using non-EVM tooling is actually very significant, or not something to ignore, to the point where it maybe is better to use something suboptimal because of the distribution like surface that you're able to reach is 90 or 100x what it normally would be. So that came through apparent of maybe instead of focusing on these like two dApps that we were planning on launching, it's actually more important to just innovate on the EVM, which is something that helped steer the roadmap. And I guess came from that. You're asking more from on-chain data, but yeah, sometimes we'll also see, I guess the biggest one I guess would be just logging like errors that people encounter to see, things to improve on like the application or like chain side. But I guess we haven't had a ton that are, I think a lot of the benefit so far has been like actually talking to users and talking to builders more so than something they're doing on chain telling us the next step, at least thus far. Yeah.
Yeah, which makes sense at an early stage. It's the qualitative aspects that you kind of put more emphasis on to really understand what you're thinking of, what their experience has been like, instead of the more quantitative on-chain metrics, which you start getting more of as your chain grows. You get more traction, which those then start to tell their own story, where it can become pretty beneficial. Yeah, I'll let you go soon. But where it can come pretty beneficial for thinking of how you want to allocate grants, which type of builders, which type of projects, and so forth, once you start getting the activity and seeing that data on chain.
Yeah. I would say, though, in our team in particular, we do pay a lot of attention to, well, I guess before your chain is launched or when it's very early, you don't have the data from your side, but there's all the data on all the other chains. So we do actually pay a lot of attention to going through, what seems to work well, or let's say, what seems to be like the crowd favorites in terms of DeFi that you kind of like need to have, or observing things like pump.fun and all of that pretty early. Is you could just see them from like the on-chain metrics. So we do actually pay pretty close attention to that across looking at what is actually being used and has traction or seems to be doing very promising in the landscape more broadly. So yeah, so it's not necessarily on-chain data on us, but on-chain data in general is definitely useful.
Really glad you said that. That's actually a narrative that I've been trying to communicate very clearly to a lot of project teams and biz dev teams as well, is that when we're in an open permissionless environment where you can view the data of your competitors in real time, like really granular level data, you're probably going to want to dig into that with your biz dev team and try to understand which direction to steer your own operations, what's working, what's not. No need to make the same mistakes as everyone else when you can see what works on chain. As we're speaking about business development, I'd love to hear what the biggest both drivers and challenges are related to your growth at the moment then.
Yeah, I think I'll narrow it to if you're talking about onboarding new projects to build. So in one regard, you want to show that you have like, for example, we have like a large grants program, like out of the foundation. So talked to a bunch of projects there, and we're like, spun up a venture arm. And so you have these different systems through which you can evaluate projects and get them to come build. But a large number are like early stage enough that they haven't done like a private raise or aren't sure how to get like bootstrapping capital to launch their thing. So then one of the main challenges is like grant farmers, of people that are coming in, like the intention is just to come get a grant. It's not actually to make a dApp that sticks around. So then you almost have to have like structured deals to not be prioritized towards or not be exploitable by grant farmers. But then through doing so, a lot of the projects that can almost like pass the minimum bar of quality or what have you are late stage enough that they don't need a grant or something. Like they're fine on their own. So you enter this thing out. I guess like I never did venture. I guess I imagine this is similar to like what seed stage venture capital is like or something. But yeah, it's almost like the quality of projects that are late stage enough don't need your help, but then the ones that are too early that are seeking the help may be to the point of either like malintentioned or like unable to make something that would compete with the current like landscape in some regard, right? I don't know if I phrased that well, but yeah.
I think you did. You set out to build a blockchain and you end up becoming like an early stage capital allocator, which is kind of funny, but makes complete sense. I think you phrased it well. Now, just maybe wrapping this up then, I think this was a great overview of everything going on at Nibiru. You have a refreshing approach to the space. I like it. What's next? What's coming up in your kind of mid to long-term roadmap?
Yeah, so the biggest things are, we talked about a little bit of announcement. So we got the EVM that we've been working on to a good point on, DevNets and like out for alpha testing so that people can actually build on it. And then the next thing is to get it to feature completeness, audit, and then actually have that out. And then working with a couple teams to like, do sort of like big bang, like DApp launches on top of it. So that would be the biggest, most immediate thing in the roadmap. We did also finish the feature for, parallel execution. So that'll increase the throughput. People tend to get pretty excited about it. I guess it doesn't change anything from like your direct functionality, but it'll mean that you can service more dApps and, not have the network slow down. But yeah, those would be the two main things I would highlight in the like mid to long-term roadmap.
That sounds awesome. Thank you so much, Unique, for taking the time to walk us through everything going on in your ecosystem. And I wish you and the team the best of luck in pushing things forward. You're on the right trajectory, so appreciate your time today.
Thank you.